what she said.
Okay, cool. So I guess, are you ready to start? Yeah, let's get started now. We posted a couple of questions, guys, because we want to understand, who's our audience today, where you're located. Maybe you at some point spoke to me before. My name is Natalie. I'm the head of sales at Mighty Buildings. Here today we have Zane. So here's our, project manager and land use entitlement manager as well. So he does all the permits and, knowledgeable in that field. But we do get a lot of questions about, how to finance, ADUs, and this is an extremely hot topic, and we are super excited for all of you to join today, and we hopefully will, educate you how to finance all your ADUs with our guest speaker, Lindsay Moon. Lindsay works at, a brokerage firm, Searchlight Lending, and also Green Galaxy Builders. But Lindsay, say hi.
Hi, everyone. Yeah, I'm a licensed mortgage broker with Searchlight Lending. We're an independent brokerage firm based in San Rafael, California, right in downtown San Rafael. So for the Bay Area, I'm a local broker, and we do all different kinds of loan products. We do everything residential, commercial, construction, private money. So we're able to offer the full gamut of loan products and more.
Cool. So just real quick, an agenda today. So we gonna talk, first of all, we'll introduce ourselves once again. We'll talk about, benefits of working, with an independent broker that can help you, finance your ADU. We'll talk about, different, financing options that you have for an ADU. We'll talk about, pre-qualification process, again, advantages and, disadvantages of some of them. And then we'll briefly recap on all of that, and we'll, open up a Q&A session. And just to, quickly go over, and again, with some of them, with some of you, we may already, spoken before, but Mighty Buildings is, a prefab modular builder based here, in the Bay Area. We have our Oakland facility. So we are, on a mission to bring beautiful, affordable, and sustainable housing to California. We work throughout the entire state. So what we build is already pre-approved on the state level. We've been in business for, the past 3 years. We've delivered, multiple units. We're working on, a bunch of projects, again, throughout the entire state. We are backed by, venture capital firms. So we are, a startup. And, first and foremost, we are a tech company. So we are bringing, 3D printing technology and our unique, proprietary materials to the construction space. And again, this is our mission, and we are super excited about it. So just to quickly show you, a couple of our projects. You may see some of the photos, some works we've done, and this is basically why, we care about ADUs, because one of our first, products and the first generation of the buildings we manufacture are mostly ADUs. They could go on a plot of land, but yeah, for now we are focusing on, on the ADU space. Next. And just to quickly let you guys know, so we are partnering, so we don't provide any internal financing products. So we partnered with the strongest banks and credit unions and mortgage brokerage firms and private finance companies that could offer, again, multiple programs, customized solutions for you. Think out of the box, because ADU is a new movement, and it does take, some efforts to find, the right, financing option for like your specific situation. And probably at this point, we'll give the floor to Lindsay, and she'll quickly introduce herself once again, and yeah, we'll get started.
Thanks, Natalie. Really nice to work with you guys. We've kind of been going down similar paths and roads for a little while now. So it's nice to be here. And I, so yeah, I'm a licensed mortgage broker, first and foremost with Searchlight Lending. And as I think I mentioned, we're an independent brokerage, so we are licensed with multiple different lenders through the residential, through the commercial, through construction, private money. And so there's a great benefit to using an independent broker because usually you can find someone relatively local and that knows the market, and we get wholesale pricing for from our lenders, and we're able to kind of pass that on as an independent. So I really enjoy working with Searchlight because they run that full gamut, and we're basically able to offer all range of loan products. And with that, I like to think that I can help most people in most scenarios, which is really important because certain lenders kind of only, they may put themselves in a little niche, whereas we like to say we do it all. And so we can shop for you, find the best deals for you. And I'm also a former general contractor. I had my own firm for many, many years. It was a lot to manage, but I still have my finger in the building pot. I truly believe there's a better way to build, and that really is what kind of connected myself to not only Green Galaxy Builders, but also to Mighty Buildings, because we share those passions. There is a better way to build that's smarter, faster, cheaper, and greener. It's kind of a no-brainer. It's just kind of going to take a bit of time to get on board with these prefab methods. There are some stigmas. There are a lot of there's a lot of misinformation out there, but there's a way to build better. And I think there's room for many different people that have their hearts in the right place, good companies that are wanting to put out a building product that is going to help a lot of people. And an ADU is just that. It is going to help with filling your pockets with as far as it being an income stream, but also it's increasing the value of your home. It can create a place to live for your family, and it can help tremendously with the affordable housing market. So let's dive in. And just on the personal level, I guess I should mention, yeah, I'm from Canada, sorry, Natalie, and I live in Novato with my family. That's me. So I hope you guys will reach out. I'm happy to answer any questions after the presentation. Natalie, do you want me to kind of, do you want to introduce a slide, or do you want me to just
Yeah,
keep
you
talking?
can just go straight into it. Yeah, so Zane is sharing the slides. So if you need to go forward, just let us know. Yeah, we're keeping an eye on it.
Okay, sure. Yeah, well, I'll review here. So yeah, the benefits again of working with an independent broker such as myself is we're locally based. So I know the Bay Area. I am from Canada, but I've been here over 20 years, and I've bought and sold many houses, and I know the market. We do have software where we are able to run a person's scenario based on what they're looking for in terms of a loan amount and their credit score, and look at real-time rates and make sure that we're getting the best rate for that client. We're shopping at multiple different lenders at one time, and making sure that you're getting the best deal, and that's really important. Whereas if you're walking into a bank, you're going to be beholden to them and their rates, and if you want to shop around, it takes a lot more effort, time, and all of that. So yeah, again, able to shop around. We can get you approved through multiple different lenders. So you have options usually, as long as you're well qualified. And generally fees are lower. We don't have as much overhead. We are able to, we've got a bit of flexibility with what our fees are, whereas going to a bank, they may have stricter rules on that. And that also comes with flexibility of negotiation. And we do like to pass our savings on to the client. We're here, it's a passion of mine as to what I do, and we're here to make people's lives better. And so working with somebody that knows the industry and is local, I think is super important. So time and money saved is kind of the bottom line of working with an independent broker. It just makes sense. You can kind of sleep better at night knowing that someone shopped for you and is your advocate when you're looking for a new loan. Ready for next slide? So our four main options for the financing of an ADU really come down to these four options. Due to COVID and due to the market, everything, belts have been a little tighter lately in the financing world. However, things are rapidly changing and a lot more products are coming online, and rates are expected to stay low through at least 2021, if not 2022. And the Fed's even confirmed that. So you stand a chance to really get yourself in a position of, as home ownership, is have as low of an interest rate as you really are going to get right now. So with that said, that is the least expensive way to do this, and the easiest way to do this is doing a cash out refinance. And if you're not already in a low rate, you should be considering just refinancing in general, which is called a rate and term refinance. But getting cash out from the existing equity in your property enables you to choose exactly what you want to do and provides you with the flexibility of purchasing your product, be it a Mighty Homes or what have you, and knowing that you have control over that money and when it's released. The same with a home equity line of credit, same deal. You have the flexibility of maneuvering that money around, whereas, and we'll get into this a little bit later, a construction loan, you are beholden to what you're building and to that lender. And it's a very engaged process, whereas the other options are not. And private money, yes, private money is a real option here, especially for prefab ADUs where you're building faster. So if you, usually, you know, if you're building a home, you're going to be building it for over a year. Building an ADU, time is less than 6 months. So private money, it happens fast, it happens quickly, there's a lot less to deal with, and it's a viable option because once your ADU is installed, you just refinance back into a regular 30-year fixed product with the ADU, and you've increased your property value. It's just kind of a win-win. So it's not for everybody, but it is a viable option for some people. So just to recap, those are basically at the moment the only ADU financing options out there. There is a lot of talk about other out-of-the-box solutions, microfunding and such, and I do think some of that will be coming online. I really am hopeful some of that will be coming online to help average people realize the value of their home and help with affordable housing. But again, just with all that's going on in the world today, everyone's just a little hesitant to kind of go back to where we were, which was before COVID. We really were going forward and thinking outside of the box in terms of building better and coming up with some new solutions for financing. So let's dive in further. Next slide. Your pre-qualification process, it's, let's say you want to do HELOC, you want to do a refinance. Let's kind of, most people are going to go that route, and that's the route that is recommended, especially if you're doing something like modular or prefab. So you should plan on about a 30-day process, roughly. You're going to have to work with someone like myself and go through the refinancing process, which is not as stressful as buying a home, but is similar in that you do need to provide some documentation. A lot of it is kind of hurry up and wait. You're going to put in your application, your credit check authorization, all of your asset documentation. Things get submitted, goes through underwriting. you get another set of conditions. So it's just a little bit of a back and forth. It's not, it shouldn't be stressful. If you're working with a good broker, it shouldn't be too stressful. And with that, you sometimes do need an appraisal for refinancing. It really depends on a lot of different factors, including the underwriting, how much your home is worth. But there is the possibility of getting an appraisal waiver, which is nice and saves on time. I know some people are a little bit hesitant these days to allow a stranger in their home, but that's probably the most invasive process as far as a refinancing or even doing a HELOC. And they really maintain the utmost respect of your home. And of course, no one wants to get sick. So feedback from my clients say they really haven't been all that difficult. So yeah, it is a bit of a process to refinance. A lot of it is just kind of waiting for it to all kind of get processed. It's not enough of a headache where you realize that at the end product, you're going to have, a large amount of cash back to pull off this project. And that's also a real increase to the value of your home. And also you can have another appraisal as well when you are done building, and that will also help. You can refinance at that point as well. I don't want to go off on too many tangents because I know we have a lot of participants. I think what's really important is everybody's situation is going to be different, and what they're looking to build, their financial situation, it's kind of hard to cover all of that. And so what's really important is you should call your broker, or you call somebody and you talk to them about what you have, what you can do, what you want to do, and we can come up with options and solutions. Yeah, that's kind of a general overview of a refinancing process. Let's move to the next slide. I think I covered a lot of this, so I don't want to.
That last slide, so we
I
should probably.
know, I know. But maybe we should do, yeah, I was just going to say, let's talk about our example. So a general rule, if you're planning on staying in your home long term, is if you can save at least 0.5%, and I know that doesn't seem like much, but it truly is. If you can save 0.5% or more on it by refinancing, it saves you a huge amount of money. So Zane, do you want to bring up the mortgage calculator and we'll just do that example we were talking about?
Well, we'll see if this works right. Let me know if you see it on the screen. Do you see the mortgage calculator?
Yeah.
Yes.
Cool.
So let's put in refinance, and let's put in, we can leave it at 300, and let's leave it at a 30-year. So let's say it's at 3.875, which let's say that's what your current mortgage amount is. So at the top of the page, you'll see your monthly payment and a total interest paid. That's over 30 years. You're going to be paying that amount of money. Now, mortgage interest, it does have some tax advantages, but that's a lot. That's like, on a second, I can calculate this really quickly.
It's almost double what you're paying, what you're getting.
Right. So divided by 30, that's almost $7,000 a year in interest. So let's refi down to 3.0. And so we had 207,856, and now we're at 155,332. So that's a $52,000 savings, and divided by 30 years, sorry, that's $5,000 a year. So your typical general cost for a refinance, where you're getting what's called a par rate, where there are no costs, no fees associated with it. If you are going with a par rate, you will, sorry, I lost my train of thought. Can we go back to the slide for just 1 second?
course. I think, oh, that's weird. Why is it not full screen anymore? There we go.
Did we, here we go.
We stop here, yeah.
Okay. All right. Thanks. Sorry. Okay. So, general par cost to refinance, you should expect to pay about $4,000 for title fees, broker fees. Excuse me. I'm sorry. I'm sorry. I just needed a glass of water, a drink of water. So paying that $4,000 is saving you what, $50,000. $5,000 a month. So if you're not planning on staying in your home more than a year, it doesn't pay out. If you're planning on staying in your house more than 2 years, it certainly makes sense to pay that $4,000 to refinance, which can be wrapped up into your loan, so you're not paying anything out of pocket. It really does make sense long term. Go ahead and use just Google, amortization calculator and put in your current mortgage amount and your rate, and look at what you're paying in interest every year for your 30-year or your 15-year fixed rate mortgage, and just go down 0.5%. It makes a huge difference. And so I highly recommend you doing this, whether or not you want cash out or not. So let's move on to the next slide. And a HELOC, which sounds kind of like a cool term, but it stands for Home Equity Line of Credit. Again, is pulling existing equity out of your home, and it is good for smaller or short-term loans. The advantages of doing a HELOC versus cash out refinance will really depend on a number of factors and is going to be individually based. So again, I do encourage you to speak with your mortgage broker about what would make the most sense for you. I'd say, I think that's about all we can say about that. Natalie, do you want to, since you came up with this one, do you kind of want to review your math here, and then I can add anything else?
So one of the best ways to also, get a financing for an ADU is to get a home equity line of credit. And so with one of our, other lenders, we came up with just kind of a, great example. If your house was, purchased somewhere in, 2011 or 12, that's where, a lot of value came in the past, in the most recent years. So if the house was purchased, at $350,000, actually now it should be valued somewhat, in the range of $700,000. And your mortgage balance may be, $290,000. So by doing, a simple math, by, accounting for 80% of the present value of the house, and, minus the outstanding, loan balances and the mortgage balance. So you are able to pull out equity somewhat in the range of $270,000. And you just have to ask yourself, does this cover the job of the ADU that you're looking to build? So usually, with our solutions, for $270,000 would cover 700 square feet, 1 bedroom, 1 bath, or 2 bedroom, 1 bath ADU, because you don't need, you don't pay any impact fees. It's a pretty small and compact, model. It comes with all the, fixtures and appliances, and it does cover, the foundation, utilities, installation, and all other jobs. So yeah, it could be a decent sized ADU for a guest house or or a rental unit too. You know, eventually it could pay itself off, you know, in the next, 7 to 9 years, again, based on, the location. Cool. We'll share the slides. So if you guys want to, try to do the same one for your property, you could do the simple math. And let's look at the second example. So this house was purchased in 2014. The house is also valued at 700, but the mortgage balance on that property is $390,000. So in that case, our available equity, if we're again looking at the 80% value of, the property, we're looking at about, $170,000. So we do need to ask again, like, does this cover the job? And do you have, the difference in cash to cover, the entire project? So with the available equity of, $170,000, with our options, because you still need all the infrastructure, all the utilities, foundation, some equipment on site and all the permitting fees as well. So we're probably looking at a studio size. So then again, guys, you should ask yourself if you would like to wait for, the next couple of years and, save up a little bit more in order to build a larger, square footage to maximize the space of your property, or potentially, you can get again, construction loan as an add-on or private money loan, build it quick with modular, in 4 months, and then, refinance again. Yeah, but that's kind of another, good example. Cool. Yeah, I mean, let's move forward.
Yeah. So some benefits, again, we touched on this a little bit earlier, but with a refinance and HELOC, that is going to give you the most flexibility of what you want to build and how you build it, who you're working with, a lot of different things, because with a construction loan, again, you will be beholden to the plan that you're looking to do. The lender is going to want to approve that. You also have to work with them on a payment release structure. It's just a lot more regimented. And there's some benefit to that, though, too, in that you've got an advocate, you've got another party outside kind of making sure that your contractor is following all rules and regulations. But it can also just be a lot to kind of be in the middle between the contractor that wants to get paid and the bank that isn't sure if they want to release money. It's a lot nicer to just be able to know that you've got the flexibility to release your payments as you can. The other benefits, of course, are a much lower interest rate. I don't think rates are going to drop a lot lower. I can certainly be surprised. I don't have a crystal ball, but I do think that they will maintain being low, which they are right now for quite some time. Yeah, there's a lot of advantages to that. Sorry, go ahead to the construction loan, Natalie. Yeah, construction loan is a specialized loan product. The appraisal is based on the after completed value, and costs can be higher, but there is also a one-time closed construction loan. I think there were some questions about that. It's a lot to cover, just trying to make this a general topic today. So I would suggest maybe reaching out to myself or another broker that can kind of talk about that a little further.
Lindsay, we do have a quick question about the rates on construction loans. If you could give a range, as we touch base on that real quick.
It's hard to give a range right now. Unfortunately, at the moment, I need to know exactly what's being built, and I need to know a little bit more information, unfortunately. I'd say maybe a really, really, really rough range might be like 5 to 8, but Don't quote me on that. Again, it's going to really be specific as to what you're looking to do.
Okay. Yeah, and the last topic we have is the private money loan.
And I should just say, Natalie, it wasn't that wishy-washy before COVID, but again, there's just things are changing so rapidly. More is coming online, but at the same time, rates are constantly changing, products are changing. It's almost hard to keep up with it all. So yeah, it really makes sense to just kind of talk about your specific situation. Private money loan, again, if you want to move quickly and you just want to have a bit less hassle, and you know that you can build in less than a 6-month construction time frame, which again, modular and prefab does allow you to do. Stick frame, you'd be hard pressed. Stick frame is traditional construction methods that we use now. Yeah, it may make sense to go with private money if you know that you can go with a shorter construction time, because although you're paying a higher interest rate, it's usually interest only. It can be beneficial for an investor or an investment property. Again, it's money that's in your pocket that you have the ability to release when you want to, according to the construction project. You're not beholden to being in between a bank and a contractor. But it does cost a little bit more. But again, you would refinance at the end of the construction period once your ADU is built into a more solid loan product.
Cool. And yeah, I can probably, sum it up again, guys. So the reason, why we're talking about ADUs, because again, California, accepted a new ADU law back in, January 2020 that allows, every single family house to build an additional accessory dwelling unit and an attached, junior ADU. So technically you can have up to 2 ADUs in single family lots. But what's interesting, ADUs are currently allowed on, the multifamily properties as well, which makes it, again, a great source of, rental income if you'd like to build, or, increasing your property value, investing in something you already own and the land you already have. So again, opens up, a lot more opportunities. ADU could be, a way of, multi-generational living. We've seen cases when, parents are moving in the ADU and they letting their kids, using the main house, which is, the great example of creating, affordable housing here in California. But, we've seen cases when, couples are building, a little office space, a guest house for, in-laws to stay in and, don't infringe on, each other's space. So, ADUs are great. So that's why we do them. But, fast installation, permitting process has been reduced significantly. It takes, less than 60 days right now in any, county or any jurisdiction within the entire state. If you build, small enough below, 750 square feet, there are no, impact fees. So it is more affordable. It is an incentive that the entire state provided, to allow for more construction. And does help, again, we talked about it a little bit with affordability and, urban infill, create more housing and dwelling units here in the state. Cool. And I guess now we can move forward to the Q&A, session. If you guys have any questions that, will not be answered, please, make sure to reach out to Lindsay or, to us. But I've had one great question that I wanted to start with, and Lindsay, if you could address that. So when is usually a good time, to refinance, before the project or after the project? If we could, summarize on that.
Sure. Well, that's a great question. If you have the money to build an ADU without taking any cash out or refinancing, then obviously you would want to only refinance once your property is built based on now the new value of your home with the unit on it. However, what we're kind of mainly talking about here is how do you build an ADU? Because you're going to need about $200,000. I think it's really important to say that because there's a lot of people who think you can build for less, and you may be able to come in a little bit less than that, but these homes that you see like on Amazon that cost $40,000, it's like a kid home. I mean, that's literally just showing up as a box on your driveway. That's not a home. There's no foundation. There's no drainage. There's no plumbing. There's no electrical. There's nothing. And what's really important to remember is building an ADU is still building a home. Absolutely. There's not one part of building an ADU that's different as building a home. And so it is expensive. It does cost a lot of money, and it should cost a lot of money. You do get return on your product. The amount of return is really hard to talk about because it depends on what you're building, where you're building. There's a few factors that go into that. But you should be budgeting about $200,000. So going back to what I was saying, if you have $200,000 to put down on an ADU, that's great, but most people don't. And so the best way to do it, the least expensive way, is if you do have the equity in your home, which many people do have, that is the easiest way to pull off this project, is to refinance your current mortgage, get into a lower rate, but also pull cash out and use that cash at your discretion towards, I mean, you can use it towards anything you want, but we're talking about building an ADU. Excuse me. Yeah, I think it's really important to know that you need to be budgeting for a lot of money. And once your ADU is built, you should have your home reappraised, and you may want to consider refinancing, depending again on a number of factors on your rate and such, but based upon your home's value, you may want to have that assessed so that you can potentially pull some more equity out of your home. Again, it's really a personal thing. It's going to depend on that specific person's situation, and that's why it's really good to talk over your situation with a mortgage broker.
Great. So we did have the very first question in the very beginning of the webinar. Do you have the one-time close loan? I'm not sure.
Yes, I believe the one-time close construction loan is existing right now. Things are a lot tighter, and yeah, I'd say if you're interested, again, call a mortgage broker, talk to them about your situation and what you're looking to do. It was a lot more available before COVID. There are some more and stronger limitations now on what you can do. But again, things are coming online more and more every day. So the conversation can change very quickly in terms of what's available.
Cool. Thank you, Lindsay. So we do have a question about the appraisal value, how it changes after you build an ADU. And I think, Lonnie, you asked that question, and it actually so it is a broad range, and it very depends on your location, and how big of an ADU you're building, and with what, again, materials you're building. And actually the appraiser would look at the entire area, and they would compare the existing square footage of the property to whatever is on the market. So it very depends on the appraiser. Yeah. So it could be, $50,000. It could be, $200,000 or more. So it very depends. And I wanted to answer live this question. So Lindsay, we have a question. What kind of credit do you need to qualify for a refinance?
Good question. You should have a decent credit score, but your credit score, depending on what it is, will affect your rate. There's not really, I'd say you should probably plan on having 640 and above, but we do have some loan programs for those that have a lower credit score. They may have to pay again more in the rate. So that, yeah, it's a tough question to answer broadly, but I certainly would be happy to provide a quote for somebody specifically.
We had a question about the loan to additional second floor ADU. As far as I understand, it's the same as building any other ADU or, doing an extension.
Yeah, absolutely. Certainly more invasive, just in terms of people coming into your home to do it, unless you have, if it's, second floor, yeah, that's right above your head. So that's something you may want to consider. And also, you're tying into the existing conditions of a home, depending on when that home was built and what you find, it can be opening a can of worms. It's a lot cleaner if you have the space to build a separate unit. It's going to be a lot more tying into an existing home normally.
Cool.
Generally, I should say.
So we had a question, and I think we haven't really talked about it, but can we get a HELOC on rental property so it's not the main residence of the client? Is this possible?
Absolutely, yes. If I'm understanding the question right, can you get a HELOC on a secondary property or an investment property?
Yeah,
and
investment property of rental, yeah, not the main residence.
Yeah, correct. Yes, as long as there's equity in the home. Yeah, I mean you've got to have equity in the home to do a cash out refi, of course.
Yeah, cool. So we have a question from Nora. How easy or difficult nowadays to get cash out refi?
Good question, because right when COVID hit, they kind of lenders put the kibosh on cash out, and there was kind of a little bit of time there where they weren't allowing it, but it's come back online. I'm doing one for a client right now, actually, cash out refinance, so they can do some work on their home.
Cool. So question, is there a reassessment and then the taxes going up with any of these loans?
Reassessment.
The reassess, I mean, when the house is reappraised.
Well, I mean, yeah, yes, to answer your question, that comes part and parcel. If you're going to raise the value of your home, then yes, that will be reflected.
But what Mighty Buildings did was, with our clients, so basically only the amount of the construction money is added to the old base. There was that the property was assessed, so it's not, the market value. It's like an older value. So your tax is not gonna go up more than $1,000 per year. So it is going up, but it's, insignificant for whoever is using, interesting. Yeah. So does Searchlight have a non-owner occupied HELOC product?
We don't have any products because we're just a brokerage. That product, I believe, is available. To be quite honest, for a home equity line of credit, I would be referring you to the best place to go is a local credit union. I think at the beginning of the slide, Natalie, you shared a few of the more local credit unions, and Honestly, the best place to start for a home equity line of credit is the place where you have your current mortgage, unless you're not confident with them or you don't like their rates, in which case refinance. But that's the best way to go about a HELOC is talk to a local credit union. They want to invest in their neighborhoods and they think more locally, and that's by far the best option.
So we have a question about will ADU income count towards qualifying income, either for renovation loan at time of a purchase or for a new buyer after ADU is built? Maybe it's a hard question because the person.
It's a hard question to answer. Yeah, I mean, if we're talking about I think we can only really apply this for a construction loan, because if you're doing if you're just trying to do like pull equity out of your home, they're only looking at your current. You know, you need to show your ability to repay. So no, they're not looking at any potential income of an ADU at that point. But for a construction loan, it's going to be lender dependent. They probably will. Some lenders probably will look more fondly on that than others. Again, with the working with an independent broker, the benefit of that is I would be able to shop for various different lenders to kind of see what their parameters are, and that's kind of another benefit is you're able to, you know, if you can't make a loan work with one lender, you can easily switch it over to someone else who may have different guidelines, different parameters. And that's when we're obviously not talking about a conventional mortgage product, but more of a non-conventional product or construction.
Sure. So there's a question, is there, I mean, how to best refinance an ADU on a multifamily property? But I guess, is there a difference between refinancing on a single family and multifamily?
There would be a difference in refinancing. That's kind of a different topic. You know, refinancing on a multifamily home is different than refinancing on just a residence, but it's certainly possible. I'm not sure if I quite understand if it's a multifamily unit. Are you asking
5 units or more?
5 units or more. So looking to refinance so that you can build another ADU on a property, or is that kind of what they're looking to do?
Yeah.
If there's equity in the property, it's definitely a possibility.
Mm-hmm. So JP was asking, where do your interest rates start?
Well, it depends on what you're looking to do. Right now, 15-year or a 30-year fixed rate mortgage is in the 2% range, a little over 3. It really depends on what your qualifications are and what you're shopping for, what product you're looking for. So I guess as an example, for a 30-year fixed rate refinance, par is just about 3%, somewhere in there. And for a 15-year, you're at about 2.7%. So that's about where rates are at the moment for that loan product. But again, depending on what you're looking to do, if you're doing a cash out refi, your rate will potentially be a little bit higher. And again, it's going to depend on the amount of equity and how much you're getting out. So it's very specific to that person and their financial situation.
So it does seem like there are a lot of, variables. So again, guys, feel free to, reach out. We are happy to give, free consultation to, everyone, here or just in general. Would like to connect to any of our partners, we are working on, again, depending on, what your situation is. So we'd like to help. Again, please don't hesitate to reach out. We'd love to find the right solution that would work for you. Just to answer a very, last question about the lowest, turnkey option for the ADU that we have, we're probably looking at about, $160,000 all in with the foundation, utilities, the permits, on-site labor, truck delivery, because it comes, fully pre-built, all the fixtures, appliances, and everything. So yeah, probably that would be the minimum. Cool. I think, yeah, that's the amount of questions, we have time to answer today. But thanks, Lindsay, so much for, being our, guest speaker today, and for, all the answers to all the, difficult questions we had. Yeah, thank you.
Oh, no, thank you guys. I really enjoyed it. Thank you everyone for attending. I'm happy to answer questions. Best way to reach out to me is via email, and I'm happy to get back with you. I'm happy to provide quotes or give you a little bit, kind of talk about your specific situation more, and help kind of guide you as to what might make more sense, the most sense for your specific situation. And yeah, I just want to give a shout out again to you guys. I think what you're doing is really, really cool. And I really wish you all the best with your endeavors. It's really important to be building in a better way. And I think that building within a factory-like setting, the way that cars are built, is going to be a big way of the future. I think it's going to bring in a lot of young adults that want to work tech jobs and want something challenging. And it just makes sense in terms of the risk of building. No one's out in the hot sun hammering as much. Just these prefab and modular ways are really the way forward for building. And I just love what you guys are doing. And I really believe in your product. So I just want to share that. And thanks again for having me on board.
Cool. Yeah, so Lindsay emails, Zane, if you could go back to the previous slide, we'll show the Lindsay email, let's say at searchlightlending.com, and here's her phone number, take a screenshot, feel free to reach out. But yeah, on the next slide, we were showing that we will have a live demo and walkthrough of our building that we installed in San Diego. It was a 700 square feet ADU. We have it the same in our factory in Auckland, but I know it's the first installation we had in Southern California, so we are super excited about it. Again, shelter in place, we might be able to do some private showings if someone is, super interested. We will be there on Wednesday and Thursday. And on Thursday, we're gonna do a live stream. We are doing it via Instagram, so guys, feel free to, start subscribing, start following us there. And if you'd like to attend our virtual open house, that would be, the way to do it. And again, if you'd like more info before that, don't hesitate to reach out. And another thing to mention is, and if you go to the next slide, for the real estate professionals, agents or brokers, we have a referral program. So if someone is interested in providing, more solutions to clients, and collaborating, educating, homeowners or, people on investment properties, we have a very nice referral program that does offer a commission as well. So yeah, if someone would like more info, again, please reach out, either Natalie@mightybuildings.com or info@mightybuildings.com. Super easy, you know where to find us. Cool. I think that's it for today. Again, if someone has a question that we were not able to answer, please reach out. We'd love to talk to you guys. Thanks, everyone.
Thanks, Natalie. Thanks, Zane. Bye-bye.
Bye. Thank you so much.
Thank you, guys. Thanks for joining again.